Hello and welcome. I'm Abhishek Singh, and you're watching Market Movers, a must watch show if you want to make bumper profits, enter into the right sectors at the right time, and find out when to book profits. So, whether you're a serious trader or someone who trades part time, I promise you, in under 10 minutes, if you watch the complete show, you'll walk away with all that you need to know about the stock markets, including what moved the markets today and what's likely to happen tomorrow. So let's dive right in. As always, we have with us Vaishali Parekh, Vice President, Technical Research at Prabhudas Lilladher. Welcome to the show, Ms. Parekh.
Hello, Abhishek. Thank you for having me on the show. Today, indeed, has been a different day after a very long time. So, yes.
Yeah, I was finding it difficult to hold a smile on my face while doing the show intro because the market's bleeding. Everything is in red.
Well, actually, we were fearing this, weren't we? Because, see, technically speaking, we were expecting a target of 24,900 and we came pretty close to that. I think we opened strong, but we did not sustain. So, this was much awaited, but yes, it happened today. But yet, we have
Right.
still not broken the support. It has just been profit booking for now, and there is some nervousness.
So, for the benefit of our viewers, if you can once again talk about key support levels, both in case of Nifty 50 and Bank Nifty.
So, on an immediate basis, we need to wait and watch for 24,500 levels to break decisively. Otherwise, for the coming week, I would say 24,400 should act as a near term support and resistance, of course, at 25,000 levels. For Bank Nifty, we have been seeing a range bound movement, not much of a clarity. It's a support of 52,000 and 53,000 as resistance. So, unless and until we see a decisive break of 51,800, it's hard to tell whether we are seeing signs of reversal.
Right. And because I'm trying to find if I can find some index, if I can find some stock which is in the green. And I wish I could show on camera the list that I have, watch list that I have on my phone. Everything is in red. But the good part is perhaps, and please correct me if I'm wrong, market continues to be, range bound. Most of the indices, of course, they have fallen. In fact, energy index has fallen by more than 1,000 points. Then there is, of course, a big fall in mid cap 100, again of another 1,000 points plus, 1,200 points to be exact. And similarly, other indices, including the auto index, which is down by more than 600 points. But despite this, it looks like these indices are still range bound.
So I'll tell you, first of all, let's start with the Nifty Mid Cap 100.
Sure.
Yesterday, we had sounded caution to all of our clients because if you see the indicator RSI on the daily chart had already
Yeah.
come out of its overbought zone and showing signs of fatigue. And that is what, to our expectation, that has happened. And this is just the beginning. I would say that yet we are still on a support. But if we see a further downside, a further correction setting in, I think we can slide furthermore. So it is definitely uh, something to be cautious about because mid cap, small cap, all these sectors, till now we have seen minor correction and buying coming in at lower levels. But since 2 days in these sectors, we are seeing continuous selling pressure. And Nifty also, if you talk about individual sectors, whether it is metal or auto or pharma, we have seen a runaway rally all these months. So it's about time. Too early to say, but yes, one has to sound caution.
Yeah, when the markets have been giving you the kind of returns that they have been for months, this doesn't look like more than a blip, at least at this stage. And of course, we have the big ticket event next week, which is the budget. But looking again, going back again to the mid cap 100, the index today has broken the moving average 20 days. So it's definitely, in a wait and watch zone.
Definitely. So I would say that actually, even we are talking about the budget, but let's talk about individual sector. Even if it's a populist budget or something, you see the FMCG counter, as we have been speaking about, we have seen good run up. You see the rail sector, we have seen a good run up. You see defense, you see power stocks, all have seen a good run up. So I guess the market players have been very smart and they have preempted, and we've seen the rally. Now let's see whether this is factored in once the budget announcement takes place, or are we still seeing a further upside? But well, at this juncture, today, as of today, I would say it is definitely cautious move.
And as we were discussing earlier, in that case, what we will do is this: we will skip over the recommendations that we generally have in the end, because you were telling me that you're of the opinion that at this point in time, people should, hold on to the cash in their hands, keep it in the bank, and wait and watch.
So I would say market never gives a one-way move. I mean, though we have seen an extended run, but market will definitely give us a chance to see a dip. To what level, that time will tell. But it would be prudent to keep some cash in hand, or at least not have leveraged stocks, because that would put you in trouble if we see a good corrective move. So I would say let's wait it out. We are not far away from the budget day, and let's see how the market reacts.
And interestingly, railway stocks, for example, RVNL, is up 4.7%. I mean, it had been falling for a while for last 5 or 6 trading sessions, and now it's up 4.7%. So still, I mean, all these stocks, despite the falls that they've seen in the either past few days or today, continue to be range bound. That said, if you would like, Ms. Parekh, at this stage, let's take a look at some of the stocks that you recommended, earlier this week, and if there are certain stocks based on your recommendations that you would like to people, either you would like them to continue to hold or you would like them to get out of it.
So let's start with SBI. That is one of the stocks that which has given us a good performance, and we have met with the target. So I would say for
Right.
now, book profit at 900 levels, and Canara Bank and Bank of Baroda, I think, were recommended. So Canara Bank saw a minor up move, but today's move is a bit challenging. I think PSU sector banking stocks, these mid cap banks, are showing some exhaustion. So I would say exit. The other day we had recommended LIC, which is still doing well. So I would say continue holding with a trailing stop loss. NOSIL was another stock. So support levels for now has broken. So from a short-term trading perspective, one can exit. But for a longer period of time, if people are ready to hold, I think the stock is good and it can give you a good upside move. But for now, well, we are at a make or break. So if on closing we see 290 levels breaking, I would suggest exit. Now, yesterday we had recommended Wipro. Wipro, we saw a good opening, but it's still holding on. We are awaiting the results, so that we'll see. But Tata Motors, we've hit the stop loss, so I would suggest to exit for now.
Right. All right. Now that sounds like a plan, because when the market is not doing what you expect it to do, or what you have positioned yourself for it to do, in that case, as you were saying earlier, it's better to wait and watch. On
Yes,
that note, thank you so much for taking out the time once again to talk to us, Ms. Parekh. Thank you.
pleasure.